As you know from the title, the company we're taking a look at today is Elastic. And I'm almost 100% sure that some of you have asked me to review this stock in the past. Admittedly, I should have listened and I didn't, but we're here now, so let's go ahead and get the show on the road. Hey everyone, and thanks for joining me today. My name is Matt, and as always, before we get started here, I just need to say, not advice, don't take it as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only. Also remember, if you enjoy this video, I just hope you consider hitting the like button for me, as well as subscribing if you haven't already. If you're not familiar with Elastic, they are a search engine company that started in Amsterdam back in 2012. They have around 15,000 subscription-based customers around the globe, and I'm sure you'll recognize a few of these names from this chart here. Just to pinpoint a few of them, we have companies like Uber, Audi, T-Mobile, Tinder, Adobe, and Shopify. And of course, this is something that I like to see. You might remember from my Palantir video a while ago, one of the concerns that I had with this company is about half of their revenue came from one source. Now, yes, that source was the US government, which is a pretty good customer to have, but I don't like when companies are very dependent on one customer, because if they decide to take their business elsewhere, it could take a long time for that company to recover that loss from losing that company while trying to gain new customers. Now, I'm not sure if Palantir still has that same customer base today. I'm sure they've made some adjustments and have taken on some new business. But when I do look at a subscription-based company, I want to make sure that they are not dependent on just one or two main players, but are spread out across multiple different companies or have multiple different people paying for their subscription service. And apparently, a lot of people do enjoy working with Elastic because they have a net retention ratio of over 130%, which is a lot of people deciding to stick with this service. But with this being a search engine company, we can't not mention the competition that they'll face. And that was one of the concerns I had about Elastic when I was doing my research for this company, because to me, Elastic seems like a small fish that is swimming with a lot of big sharks out there in the search engine space. Because when it comes to search, a lot of us will obviously think of Google immediately, and maybe some of you also think about Amazon and Amazon Web Services. I'm also sure, though, there's a way that we can make the argument that Facebook is also a search engine, and somehow, some way, I'm sure that Microsoft is also considered a search engine in some regards. Now, personally, when it comes to SaaS companies, or if I were to be a person to start a SaaS company, search is probably the last thing I would want to get into because of those big players in this space already. But I always say, I do like investments that don't have many friends, and I guess being a small fish amongst sharks is where the opportunity lies. And just to be totally honest, this is not really my area of expertise when it comes to what they do, competitors, what's different about them. I don't really know a whole lot about these different softwares and technologies, but from what I understand with this company, I really like what they provide as a service. In case you're not familiar, again, I know I listed some companies here, but just the way that we utilize their searches is on Tinder, their search engine is what allows for people to connect with each other. And on Uber, their search is also what allows for you to connect with the driver or find people in your areas. So it goes much further beyond just keyword searches or, how many stars are in the sky that you type in on Google or some random search like that. It's actually a pretty intelligent and intuitive way of searching things. And again, it goes much further beyond just a keyword search, which is something that was pretty hard for me to wrap my head around because it's just beyond my scope of abilities when it comes to technology. But now what I would like to do is go ahead and move on to the numbers that we have here for Elastic. And we will be doing a comparison this week. The company that we'll be doing the comparison to is Splunk. I realize now this might not necessarily be the best comparison, but it is what came up on some of my searches for who are their biggest competitors, so bear with me here. Also, Splunk is another company that I believe back when I talked about Palantir, a lot of you suggested for me to look into, so here we finally are taking a look at Splunk as well. Now, I have to admit, looking at these numbers are a little all over the place, but we'll get to that. We'll start off here with the market cap. So 13 billion compared to 22 billion, these are kind of in the same field and about where I expected them to be, considering SaaS is such a huge area of opportunity right now in the tech space. If we look at it from this metric, we can tell that both of these companies are pretty overvalued, specifically Elastic, given that their price to sales ratio is at 21.55. Now, just again as a reference with price to sales, I generally like to see those numbers between 1 to 2. So with these companies both being well beyond 2, we can tell that these are both overvalued companies just from looking at this metric alone. What does have me excited though about Elastic is when it comes to their year-over-year revenue growth of 42.3%. That is something very encouraging for me to see, especially as this company is not profitable. We'll touch on the EBITDA in a moment here, but what did get me more excited about Elastic is also seeing that Splunk had a revenue growth of negative 2.99%. Now, I didn't really take the time to do a huge deep dive into Splunk, but that's not really the best thing to see, so I'd be curious to see what is causing this negative revenue growth. Now, what does have me slightly concerned here, though, is this EBITDA growth. Now, remember, when it comes to EBITDA growth, it's essentially a cash flow measurement, and it stands for the earnings before interest, taxes, depreciation, and amortization. Now, just kind of quickly here to explain the difference between revenue growth and EBITDA growth. So, revenue growth is how much revenue the company brings in on a year-over-year basis, and how much is that growing. EBITDA growth is also how much revenue they're bringing in, but you subtract normal expenses. That's where that whole earnings before interest, taxes, depreciation, and amortization comes into play. You don't really need to worry about that. If you look at an income statement, then you'll have a better understanding as to where this comes from, but just kind of keep that in mind. So obviously, this company has some pretty big expenses that are coming up, and I would be more curious to see exactly what that is. Is this just a result of expansion or growth for the company? Because with them having a positive revenue growth but negative EBITDA growth, I can only imagine that they either have some big expansions that are going on or something else that is causing this negative cash flow. But anyway, enough on that right there. I also want to take a look here at the quick ratio. Both these pretty solid, especially for younger companies. I don't know exactly when Splunk came out, but I know with Elastic only being out for 9 years, give or take, it's pretty impressive to see that they do have a quick ratio that sits over 1. Now, I did not include a price to earnings ratio for either of these companies because neither of them have positive earnings yet. But Elastic does project for them to have positive earnings as early as 2022. So they are hoping by next year that they have positive earnings, which is something that I would look forward to. And again, admittedly, I didn't take as much time as I probably should have to see what this company has going on, but I am encouraged by the fact that they are projected to be profitable by next year. Now, admittedly, looking at those numbers, I wasn't exactly sure how I wanted to play this here because I actually thought I saw some pretty good opportunity with Splunk. Now, I did take this a step further and I went to Simply Wall Street to see what their numbers said. And as we could see here, Elastic is a company that can be viewed as undervalued by a small margin if we use their discounted cash flow analysis. But if we look at Splunk, they're actually a lot more undervalued using that cash flow analysis or the discounted cash flow analysis, which is something that got me a little bit more excited to have it as an investment. Now, I did spend more time looking into Elastic than I did Splunk for the investment, but this week I actually went ahead and decided to buy both in the portfolio. I did put more emphasis into Elastic because I did spend more time researching that company, and I think I have a little bit better understanding as to what they do than what I know with Splunk. But again, I really liked the numbers that I saw with Splunk, and it's just something I didn't want to miss out on while I do my research. So let me go ahead and get that pulled up and I will be right back with you. So taking a look here, I bought 33 shares of Elastic. We had an average price of about $148.94 a share, and it last clocked in at about $150.79 a share. So that does give us a gain of around $61.05. Again, I don't get too excited about these initial gains because I just added this to the portfolio this morning. So it's a good increase, but we'll just see how this one plays out. When it comes to Splunk, not doing as well, but I can't say it's doing terribly either. I only bought 20 shares of Splunk, which was around $135.53 a share. Last clocked in at $135.35, so giving us a loss of around $3.60. Again, nothing too bad. I think I put in around I put in just shy of $3,000 for this one. So a little bit more than 50% of the $5,000 that I usually put into these positions. But again, I didn't want to go all into this one right away until I was able to do some further research. Seeing those discounted cash flow analysis was definitely encouraging for me, but I never really suggest buying a stock or adding it to a watch list. If all you've done is just seen a few metrics about them, I always like to take the time to get a better understanding for companies. But again, this at least allows me to have my feet in the water with this one while I still do my research and can have a better understanding as to if this is an investment that fits well inside of my portfolio. As always, just take a few highlights here of some of the other companies we have. So Blackstone, Shopify, comes as no surprise, doing fantastic. So I'm super happy about those. And looks like this portfolio is just kind of sitting around this $2,000 gain mark. We do have looks like a fair balance between positive stocks and losing stocks, but at least we're positive in the earnings section for this portfolio, which is something I'm excited about. And again, I apologize if this video is not my most in-depth video. Kind of a crazy week, you don't really need to hear all about that, but I'm very excited to have these companies in the portfolio, and they're ones that I do want to spend more time looking into. So stay tuned probably for a follow-up video for this. I just wanted to make sure that I came out with my Watchlist Wednesday video this week, and for all of you to kind of see the companies that I'm looking at for this week's stocks. And also, I apologize too that I'm not able to upload as frequently as I once was. We actually just hired our first person into our business, which is something very exciting, but admittedly comes with a pretty steep learning curve. And that's just been getting a lot of my attention because I want to make sure we set up this person for success. Also, a lot of what's been going on with me, a lot of things I've been learning recently have had to do more with real estate than they've had to do with stocks. So again, if you'd be interested in hearing about my business, kind of what's going on with my life, I'll be happy to make some other videos with that. But if you want me to just stick with stocks, that's okay with me too. I still enjoy learning about stocks as well. If you enjoyed this video, I hope you consider liking it, and if you haven't already, I just hope you consider subscribing as well. Comment below too what other stocks you'd like for me to look at. But with all that said, I do have to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I will let you go ahead, enjoy the rest of your day, and I will see you next time.